when you shop for properties, it's exciting when you finally find one. You come to agreement with the seller. Maybe you went back and forth a couple counter offers. Now you're in escrow. What happens next? Look, we're going to talk about that today in our homebuyer seminar. I'm Bill Gross at Bill Gross Probate, along with my good friend and colleague,
Patricia Castillo.
and our good friend, colleague, and lender.
Shem Lender, how's it going, guys?
Great. What happens after the open escrow? We real estate agents, I think that we go on vacation and we lounge around the pool and drink margaritas until we get paid. Is that kind of what happens, Patricia?
Oh gosh, I wish. Well, that happens later, but um, no, it actually gets quite busy. And I always warn my clients, start watching your emails, especially because a lot of people that I talk to don't watch their emails regularly. They may check it at the end of the day after work, first thing in the morning, but not typically throughout the day. I mean, we're on our email all day long, but that's, it's
Yeah.
a different, different management of email with clients. So I always let my clients know once your offer gets accepted, if you're not able to look at your email right away, I will be texting you to let you know when you're have received correspondence. But it gets very busy, and sometimes it could feel a little bit overwhelming because you're getting escrow instructions, you're getting loan disclosures from your lender, you're getting preliminary documents to review, and so all of that can be a little bit overwhelming. But I feel like it's more digestible. It's easier to manage when the client knows and expects what they're going to be receiving. So they've been informed what they're going to be receiving. So I like to send my clients an email letting them know the sequential events that are going to be happening, right? So the first thing they have to do is send in their earnest money deposit within 3 business days of their offer being accepted. And so the escrow company will send out their wire instructions to the buyer. And just because there's been so much wire fraud and email hacking, the buyers, they have to call the escrow company to get the account number of where they're sending their funds and also confirm the ABA routing number and bank account information with the escrow officer. So once the money gets wired, um, the due diligence period has already started, right? So at that point, we're ordering inspections. And I always ask my clients if they have an inspector that they would like to use, because some people have maybe a handyman or a contractor in their family, and they're very comfortable with them. So I always ask them, if you feel that they are fully capable and skilled to perform a full home inspection for you, then absolutely. But if not, then we should use a licensed home inspector. And so that's something that the buyer can choose to do. Now it depends. If it's an investor, they have their own team. The investor can come in, walk the property, and decide immediately if they're going to do any type of other inspection, right? And they usually have their own team that will come in and do their own inspections. So once we have our home inspection ordered, we get the report back usually within 24 to 48 hours. And that's part of the fun part, is going over the home inspection, seeing what the condition of the property is, and discussing all of those top, I should say, like the most important items that are reported that are deficient. Maybe they need something, maybe the air conditioner is not working, maybe it's leaking, maybe there was mold found under the sink, different things like that. Maybe the roof has some work it needs to be repaired. So those are the things that we look for, and that's going to be used as part of our negotiations to hopefully get a seller credit or have the seller repair one of those items, or maybe a combination of both. So I've used all different strategies to get the most benefit for my client. And that's also something that the seller has the right to say yes or no, right? They can agree or disagree. But there's a lot that happens in that first week of opening escrow.
And on the loan side, I'll talk about what happens on the loan side because, like as Patricia said, there's escrow, there's the real estate part, and then there's the financing part. So a lot of questions I get with the deposit, the EMD, that money is going towards your down payment. So I get asked that a lot. Hey, this EMD, is this a separate whole other thing, or is this part of your figures? So if you're working with me and I send you a loan estimate when you're pre-qualified, whatever that number I give you is, whenever you put your EMD in, it's going towards that number. Okay, so I definitely want to share that with a lot of people. So your EMD's in. Number two on the loan side is, like Patricia said, your loan disclosures. The main thing in the loan disclosures is your loan estimate. Now, if you're working with me, you probably already got a loan estimate, but this one is going to come from the bank themselves that we're using. And again, these are just estimates. So don't get scared, right? These are just estimates, because what happens is as soon as you put your deposit in, escrow will send us the real numbers, and then we'll get the real homeowner's insurance quote. We'll get the real taxes. We'll get all those real things, and we can lock the rate at that point too. So you're going to get another loan estimate. It's not going to be 100% accurate at the moment. And after you get that, you're also going to need to sign your intent to proceed. So as your loan officer, I'm submitting this to the underwriters, and they need you to sign stating that, hey, yes, this is the loan. I want to proceed with it. I want to move forward. And in order for them to do their job, you need to sign that. But that's all going to be in your loan disclosures. So EMD and then loan disclosures are out. You sign them. After that, you can also decide if you want to lock the rate or not. That's one question I always ask my clients. Hey, look, this is where the rates are at today. Do you want to lock? Yes or no? And then after that point, then we get into the appraisal. We start, paying for the appraisal, getting that going. And another question I get asked is, hey, if I order the appraisal, let's say something happens, can I get my refund back? And if the appraiser doesn't go out there, 9 times out of 10, if you're working with a company, they'll give you the money back. But as soon as the appraiser is already scheduled and goes out there, that's it. That's unfortunately non-refundable, just because the deal can fall through because of the appraiser, but this appraiser still needs to get paid. So that's one. The other thing I do want to mention is I, as a loan officer, your loan officer is going to send you a list of documents that they're going to need. Now, common things that they're going to ask for is updated pay stubs, because 9 times out of 10, you've probably been looking for a home for a few months. Pay stubs are a little outdated. Other thing is verification of rent. Almost every bank wants to make sure you're on time with your rent payments, so they're going to ask for a verification of a rent form filled out from your landlord. Also, a verification of employment. So they're going to want to verify that you're still employed, that you're in good standing with your employer, and that you're going to continue employment. You're likely to continue employment. So please, and I've had this happen, please do not get in an argument with your boss while you're in escrow, because I need them to be nice. I need them to fill out this form. And actually, it's happened more often than I would like, but I get it. People are stressed. They lash out at people, and then I have to come in and ask, hey, can I get this verification of employment form? So that's another one. And a couple of, depending on your situation, I might ask for a few more documents. But that's the main thing. That's the first week on your loan side, because after that, once you submit those things, then it's underwriting and it's the appraisal. And the one thing I do want to mention about the appraisal is that people ask me, hey, what happens if the appraisal is higher than we thought? And what happens if the appraisal is lower than we thought? So if the appraisal is, let's start off with the bad news, right? If the appraisal is lower than where you guys are at your purchase price. So let's say, for example, just to make things simple, you bought a house at $500,000, it came back at $450,000. That does not mean you're denied on the loan. I just want to make that very clear. Just because the appraisal comes back lower does not mean you are denied. What it means is, for example, let's just say you're putting down 5% and you got approved at 5% down. The lender is saying, the bank is saying, look, we are going to finance up to 95% of either the purchase price or the appraised value, whichever one's lower. So it doesn't mean that you're denied, but what it means is whatever the appraisal comes back in, if it comes back at 450, 400, they're going to loan you 95% of that number. Or you can, maybe Patricia will talk about it, you can obviously renegotiate, especially if you're within your appraisal contingencies, you can renegotiate that. Or option number 3, we can rebuttal the appraisal. We can say, hey, look, some of these comparables that you have on your report are not accurate, and here's why. And I've had agents help me out with getting some updated comps so we can go back to the appraiser and say, listen, here are a couple of comps that you might have forgotten about. Here are some lists of updates on the property you might not have known about. And they can come back, review it, and say, yes, I was wrong. Sometimes hopefully they have that good attitude, and then hey, we come back with a bigger, a higher value. Another thing that could happen with the appraisal is they may call out certain things when it comes to safety and habitability. Hey, you need this railing, or hey, you need to fix this. Here's just a crack here. So those some minor things that might need to be fixed. The most common call out I see on an appraisal is the water heater not being double strapped. So, it's as simple as, hey, get that thing strapped. Sometimes you can just take a photo of it, send it to the appraiser, show that it's done, and then after that, you're off to the races. So yeah, on the loan side, that's what's happening for us. We're getting everything bundled up. You get your initial disclosures. You're paying for the appraisal. We're asking for a bunch of verification forms for you to fill out. On top of that, I'm pretty sure Patricia and the agent is asking for inspections to be done, those reports to be handled. But Patricia, I actually wanted to ask you something, because this is something that I do get tripped on, and sometimes my clients ask me. Let's say they get their offer accepted on Saturday. Does the time start on Monday, or does it start on Sunday?
It's going to start on Sunday, because
Okay.
the EMD is due within 3 business days. But when you're talking about being under contract, we're dealing with calendar days.
That's a good point. I didn't know that. I didn't know
Yeah.
that. I knew that
sometimes if there's let's say maybe the seller is they're wanting to accept an offer, so they accept it on, let's say, Saturday, and we want to schedule an inspection right away. I usually try and order my inspection the very next day. If the seller's not providing access for whatever reason, maybe they're still cleaning out the house or getting it ready, maybe it was tenant occupied. I mean, there's a lot of different reasons why a property wouldn't be available to be seen right when the offer is accepted. Then you can also negotiate that, your time frame is going to start basically Monday, even though your offer is accepted Saturday. So everything is negotiable, right? We always remind our clients that in real estate, everything is negotiable. So I've done that before, just dealing with different types of properties like probate properties, pre-foreclosure properties. The access is not always available. And so we want to secure the property. We want to get the offer accepted. We want to keep the transaction moving forward. And so the rest we can always negotiate on. And the other thing is, let's say the inspection report came back, we're negotiating, and our time frame is coming up to remove our inspection contingency. Then at that point, if we're still working on, let's say the buyer's working on getting estimates, maybe for a roofer, maybe there was a huge leak under the house, which I've discovered that before in inspections. We're bringing out a plumber. Plumbers are, everybody's always very busy, right? So you may not be able to have a plumber come out within a day or two. It might be 72 hours. And so you can always ask for an extension. So the realtor can ask for an extension with the listing agent to remove that inspection contingency. And the same thing with the appraisal. Let's say the appraisal is taking a little bit longer. The appraiser didn't come out when he said he was, and then he called to reschedule because, this was happening during COVID, right? Like everybody was getting COVID. So the appraisers would say, oh, I can't come out today. I got sick, not feeling well. And they're not going to necessarily send out another person right away. So we just rescheduled the appraisal. The report is still being assembled and it still needs to be sent back to the lender. So if we're coming up on our time frame to remove that appraisal contingency, then the buyer can request an extension. And it would be, you have to have a reason, a reasonable request to extend whichever you're extending, whether you're extending the time frame for your inspection contingency, your appraisal contingency, or the loan contingency. Because maybe you can touch a little bit about this. So let's say you're, as you stated earlier, maybe you have outdated pay stubs. Maybe you needed a new bank statement. Maybe the buyer was, providing you with their tax returns and they were missing some pages in there and you had to get that information from them. So you may need extra time as a lender to remove that loan contingency, right? So those are things that options that the buyer has. And usually
Yeah.
when you're more into the deal, it's very, very unlikely that a seller is going to say, no, I'm not going to give you an extra 2 or 3 days, right? Because the whole point is the goal is to keep the deal moving forward.
Yeah, and I think on my side, I think the main reasons why I would even need a loan contingency extension is usually two things. It's either one, verification of employment forms. Sometimes these employers just move so slow, and especially if I have multiple buyers and I'm chasing after multiple companies for these they're called verification of employment VOEs. That could really strain our time contingency frames.
Right.
Another one, let me think of another one. I mean, that's like the major one that I need. Sometimes things that come up on the credit report that weren't on when I initially quoted, somebody. So this is very important. If something comes up, let's just say, hey, or I have an old trade line that just popped up. Sometimes the banks find things that we don't. It's rare, but sometimes they do. Then we have to explain it, restructure it. Sometimes if that puts a wrench in our game plan, that can happen. Another thing too, I think the biggest extension I've ever asked for was because we were trying to get someone's student loan. So this is a good learning lesson. If you have student loans, FHA will let you bundle them up, because if you have them in what's called, what is it called? Not for
Deferment?
forbearance, deferment. There you go. Yes. If you have student loans that are in deferment on your credit report, it'll show up as, let's just say, for example, you have 20K, 30K, 50K, whatever the case, and then they're all going to show up as zeros in terms of monthly payments. Well,
Right.
FHA and conventional, they don't accept zeros. So you either have to do 1% of the loan amount or 0.5% of the loan amount. And if that still doesn't make your debt to income ratio match what you're trying to purchase, you can go to those student loans and do a payment plan with them. And when you do your payment plan, usually that payment plan is obviously much lower than the 1 or even 0.5% of what the balance is. But you have to apply for that payment plan. So usually a lot of my clients don't like to apply for the payment plan until they get accepted on a property.
Right.
So, and I get it, right? You don't want to set yourself up and hey, it went from deferred to now I have to pay every month and I didn't even
Yeah.
get the house. I totally get
Right.
that. Yeah, but it's really straining, especially if, depending on what your student loan company is, they're just taking their sweet time in terms of giving you that payment plan. So that's something that you probably, and maybe we can touch on student loans, is that's a big thing. Is, hey, if you have a bunch of student loans, and I've seen it too. I've seen people with over 150, $200,000 student loans, and their payments like 240 a month, because it's like an
Right.
income-based payment plan. So I've seen
Yes.
miracles happen with that, but it took like 2 to 3 weeks.
Yeah. And those payment plans can change too, so it's something that you would have to revisit, look at again. And
Exactly.
when you're dealing with a credit report, it's very tricky because I had a buyer, and this happened to me before. So it's a true story.
Story
I had
time.
had a client that we had pulled his credit.
Okay.
Everything was great. Um, the lender that the buyer was working with just didn't work out, so the buyer was started to work with a different lender. That lender pulled his credit, and this happened 3 months between the first credit pull to the second credit pull. So within that time frame, there was a small balance that showed up on a Bank of America account. It was $259. And the buyer said, I don't owe any money to Bank of America. Right. So the
Oh
buyer
my
went
God.
to
Close the
Bank of
door.
America to talk to the teller to let them know that, showed them the credit report. And they said, well, we don't have any accounts for you here. So we're dealing with a credit report that shows a balance of $259. It was such a small amount, but the lender wanted it to be paid. And the buyer could not pay it because there was nowhere to send the money to, because Bank of America did not have an open account for the buyer. And so we ended up having to escalate that problem to somebody within the lender's team, and they just had to make a business decision to, waive it because it was such a
That's
small
good.
amount. So the good thing is it was a small amount, $259. But if it's something with a higher balance, I mean, that could really put a buyer behind in their home buying process, because a lender may not end up waiving that requirement, right? So these are things
Exactly.
that we work on behind the scenes. So we worked with the buyer, got it all taken care of, and he was able to move forward and purchase this property.
Yeah, and that's actually a good point, is payoffs too. So I do have clients, actually I have an escrow right now, where it's contingent upon them paying off their car, which thankfully the buyer has the money to pay off the car. But one thing that I have seen in terms of delays is usually when you have actually two options. The bank will tell you, hey, you can pay it through escrow. So, hey, you just put that additional money. Let's say you owe 20,000 for your car, put an extra 20,000 and escrow will pay for it. A lot of times, I'm not sure why. I mean, I understand, but a lot of clients, they don't want escrow to pay for it. They want to do it themselves. So, which is fine. Oops, sorry.
Right.
My camera came back. Which is fine. But if you do that, then you're going to need a letter from the creditor stating that you're at zero balance. Now, that might sound simple, but let's say, for example, a B of A that is a big company and you're trying to get a zero balance letter from them. You've paid it. Sometimes it's, hey, it needs to take 2 to 3 days to process. Then we need to confirm. Then they don't even email. They'll either fax or snail mail the letter over. So that
Right.
whole process could take 1 to 2 weeks to do. So that's another thing, is if you are looking to pay off things, and again, I get it. You don't want to pay it off now and then you end up
Yeah.
not getting the property. But like Patricia says, as a team, this is something we're having to deal with on the back end, because we have people calling us, and sometimes I have the sellers calling me, what's going on, what's going on, what's going on. And, I'm having to explain, hey, look, they're paying it off, but it needs some time. This is what happened. And yeah, sometimes these, the seller's agent or even the seller, they don't want to hear it. They want to hear we're closed. But again, these are things that we're having to work on the back end for us. So yeah, payoffs could be a big thing. But again, this is why working with a good team is crucial, because if we are having to pay off certain things, that's fine. We just have to create a roadmap. And what I typically tell my clients is, look, if you're ready to get this paid off, I need you to call the company, ask them what their process is, because sometimes they don't even know how to even pay it off 100%. So I tell them, get ready, call, let's say if it's Chase or Bank of America, or if it's the car financing company, call
Right.
them, let them know, hey, I want to pay this off. What's the process? And how do I get a zero balance letter? And the letter needs to have the account number that matches the account number on the credit report, and it needs to have your name, and it needs to say that it's zero balance. So that's, again,
All
something
these
to look out for.
Yes, all these
Yeah,
things
people,
matter.
that people don't look at.
Yeah. Well,
Yeah.
okay. I think that's a lot of information we provided today. And so if you're thinking about home buying, if you're looking at properties and you're starting to go to open houses, you're probably on your way to home ownership. And that's usually how it starts, is buyers start looking online, they start stopping at open houses. And you might have some questions. So if you have any questions, feel free to reach out to us. We're always here to help. And Shannon, if anybody wanted to get in touch with you regarding any type of loan information or interest rate information, what's the best way to reach you?
Yeah, you can reach me my cell, 661-317-8484, or my Instagram, FUND Fund with Shannon. I can definitely reach out there. You can DM me, and and I can answer any questions that you have.
Great. And I'm Patricia Castillo with EXP Realty. If anybody has any questions, feel free to reach out to me at 323-365-9909. Also, if you guys have any questions or comments, feel free to leave comments on the social media where we're going to post this on YouTube and Facebook. Let us know if you guys have any questions or any topics you'd like us to cover, and we'll be more than happy to do so.
Yes.
All right. Thank you for watching.
Thanks, guys.
Bye-bye.